Okay, good evening, everyone. Thank you for joining our session today, where we'll be discussing personal finance. I'm happy that we are all here. I'm hoping that we're going to have an exciting session. My name is Olayinko Yetunji, and I'm not here alone. So I have Ben with me, and I also have Ola with me. Ben and Ola, can you just
everyone?
So we know that you can speak.
Hi everyone.
Hi.
Good evening, everyone.
Good evening, Ben. Okay, so we're going to go straight into the session. Let me introduce our panelists today. Ola is a vice president at Parthian Partners, and Ben is a wealth manager at Stanbic IBTC Asset Management. I really want to thank Ben and Ola for joining us, even though it was short notice. Our session today will be divided into two. The first session, which will take about 30 minutes, will be I asking the questions from the panelists based on the feedback we received from the forms that were filled. And the second part will be where participants on this call will have access to ask the panelists questions directly. So as we're going on in the meeting, if you have any question, please just note it down. You have opportunity of asking at the second half of the meeting. Now, let me give a background as to why we are doing this. There has been a lot of socioeconomic impact of COVID-19. We've heard about disruption in supply chains. We've heard about some countries undergoing recession already. There are corporate losses as we speak, and if we bring it home to Nigeria, the impact is more because we know that our foreign reserves are declining. We know that it's likely that there will be devaluation of the naira. And if we don't even go too far, we should even look at inflation, the rise in prices of goods and services. So with this, there is a concern about pay cuts and job losses. And we know that we can't have a well-being if our finances are not in order. So my first question is to you, Ola. Is COVID-19 all bad news for our finances, given these macroeconomic indicators that I've highlighted?
Thanks for the opportunity to speak on your platform. Also, COVID-19 isn't all bad news. I don't think it is. It depends on what side of the curve you are on. For example, if you are a food person, if you've been selling groceries for a while, you would have experienced a boom if you are in the IT industry. And that's the thing about economic cycles. So there are some goods that would span every economic cycle, and there are some that will be good depending on the state of the economy. So for example, clothes don't matter to anybody right now. If you were a tailor, nobody's going to be asking you to sew anything. However, if you are a caterer, you can still get business. Or let's bring it down. Maybe not as many caterers, but then let's bring it down to if you sell food, you will get business at this time. So it depends on what side of the curve or the economy that you are on. It's not all bad news. It's almost like, number one, we need to understand that there's always economic cycles. If you've worked for up to 10 years, you will know that in 2008, 2009, there was something like this. So it's not new. Okay. It's just that we can't predict what will bring us to this point again, but it happens. So as an individual, your responsibility is to position your own finances because those things will always come. And that's what you can control. But to stop it from coming, you can't. But I would say it's not all bad news. If you are positioned appropriately, it isn't bad news. In fact, you might be making more money than you made in the past 5 years.
Okay. Thank you for that, Ola. That's comforting to know. So if I hear you clearly, what you're saying is that there are always economic cycles, and there will be cyclical and non-cyclical sectors. Just like you have mentioned,
exactly. Yeah.
IT are the things that will drive the economy at this point. And that's our responsibility as individuals to position ourselves such that we have access to those things, or we are able to provide services within those lines.
Those services, exactly.
Okay, that's interesting.
Or at least be invested in those sectors.
Okay, great.
If you can't provide that service directly.
Yeah. Okay, interesting. Now, Ben, are you there? I have a question for you.
Okay.
Now, what investment options will be suitable given the circumstances that we are now? You are an asset manager. People have been used to investing in mutual funds. But right now, what do you think would be a suitable investment option?
So, before talking about a suitable investment option, is better you understand your investment objective. That objective should be what's driving your investment decisions, because there are some instruments or investment securities that are suitable for the short term, some better for the mid term to the long term, and it's important to do not mismatch them, because if you mismatch them, then you may not get the expected return that you are thinking of. So imagine you have a short-term goal and you're putting that money for your short-term goal into a long-term security. There's already an investment mismatch. So it's important that we do not only look at the return, but look at actually matching objective with the right securities. Basically, that's how I would say it. But of course, there are securities. I know treasury bills are trading at around 4-5% for a 365-day bill now, which a lot of people would consider very low. But of course, money market instruments are better suited for short-term needs. Bonds are trading between 10, 11, 12% levels. But of course, they are more for the long term, unless probably maybe you are investing through maybe a mutual fund, which are more liquid instruments to put your money into. But of course, you can also consider equities. Yes, currently equities are low, but the risk in equity is also very high. But then also in the long term, we all know that equity always would outperform any other form of investment.
Okay, thank you, Ben. Ola, if I throw that question to you, what would be your opinion about investment options that we can consider at this time?
Actually, my answer would almost be close to what Ben just said. Because we are going into a region of uncertainty. The major problem with COVID is we don't know how long it's going to last. Yeah. We don't know when this is going to end for us to actually pick up, right? So there's a lot of uncertainty right now. So while some of these investment options might be cheap, we have to understand that we're not sure how long this whole problem is going to last for. Yeah. So you have to understand that if you are looking to invest right now, you really must be able to say, I can leave this money for a while and forget about it. Do you understand? Yeah. So yes, you can do equities. There are a lot of cheap stocks in terms of valuation. And of course, it's an economic cycle. And I believe we're at the bottom of a cycle. We're just starting a new cycle. So it's definitely going to go up, most likely. However, you have to be able to stay the course. Now, if you need money for school fees in October, I will not tell you to put it in equities because it can go good, it can go bad, right? Yeah. It's either which way, so it almost depends. So it also corroborates what Ben is saying. You need to understand your own horizon. You need to understand the amount of capital you can afford to put away. Also, because an uncertain period, so you probably need to actually put more cash than usual aside for buffer, because you don't know how long this is going to last. Do you understand? So I would say any major investment should be a long-term play. It shouldn't be, I'm putting in money right now, I want to get it out in three months' time, because in 3 months we might be worse off from where we are right now. But in a year's time, we might be much better, like black and white better.
Okay. Thank you, Ola. So that takes me to my next question for you, Ola. Given the predicted decline in economic growth and the looming recession, what would be the right time for investors to profit from the equity and bond market? You are experienced in fixed income. So you tell us when do you think would be the best time for both equity and the bond market?
So for equities, say profits, are you saying to invest or to profit? Because if it's to invest, when the market is down is the best time. But you also have to consider that you have to be able to stay long enough.
Okay.
So when the market is down is the best time to enter. Yeah, but you can't be profiting now. If you are selling right now, you are taking in a loss. Okay. But you can be entering now for the next 2, 3 years, 5 years, you should be in the money. Right? I'm not sure because your question is to profit. Yeah. Now is not the time to profit. Any cash, any security you're selling right now is going to be at a loss.
Okay.
Now, for the fixed income market, it's quite dicey because our fixed income market is directly connected with the macroeconomic environment, monetary policy.
Mm-hmm.
Now, if the government that was planning to borrow money outside the country finds that they can't go out of the country for a roadshow and must borrow locally, it means that there will be more supply of government securities locally. Now, ideally, in a recessionary environment, they should be trying to pump money into the system and keep interest rates low. But depending on how much they are going to be borrowing, you might find that bond yields may go up, meaning that bond prices will come down. So if you buy now, you can actually be at a loss, right? So the bond market is a little dicey and is more careful because the CBN, the monetary policy, is the major driver of how the bond market comes out. So for the individual, I will be more skeptical of entering into the bond market, except if I'm going to buy a 5-year bond and hold it till maturity. Then I'm not concerned about the ups and the downs in the market, if you understand what I mean. I think that should be good.
Okay, thank you very much, Ola. That's clear. That's clear enough. Now, Ben, I'm coming to you now. In terms of personal finance model, what models exist, and how do you know which one you should adopt as an individual?
Okay, in terms of models, yes, there are various models that exist, but the truth of the matter is one should always stick to the one that works for him or her. One particular one I usually make use of is the income expense formula. So you want to track all your sources of income, and you want to also track all your expenditure, most especially in the difference between your savings. But in doing this exercise, there's this thing that jumps up to you, especially when you start listing out all your expenses. You find out that there are areas where you feel you must have overspent, and areas you feel that you are spending that probably it's not in line with your objective. That way, you keep reducing on those kind of expenditure so that you can channel or you have more money to save towards your desired objective, which is the most important thing in the first place. And it's not out of place for people to have a budget in place. And when people hear about budgets, they tend to think of something that is very restrictive, really, especially when they see organizations make budgets at the end of the year or beginning of a new year and all that, complex calculations and all that. The truth of the matter is, budget is not restrictive and is not there to restrict you. It's just there to guide you on how you spend your money. So I see it more like a spending plan. And the truth of the matter is, if you are disciplined enough in keeping with your budget or your spending plan, you find out that you are able to track your expenditures and able to reduce on those areas and gather much money into your savings and for you to invest in line with your set objectives, basically.
Okay, thank you, Ben. So you are saying that even like organizations have their own budgets, as individuals, we should also have our own budgets as a spending plan that can guide us in terms of our income and expenses. You
Very
know,
true. Very
being an
correct.
accountant, I used to do that, you know, and I did it for a while. I think over a period of 2 years, where I was keeping a record of my spending and my expenditure. And what it helped me to do was to, first of all, identify, I mean, it gave me clarity on the kind of person that I was. Like, what do I spend the most on? And for things that I felt, oh, did I really spend up to this? I made a conscious effort to stop spending on those things. And I think a budget is something that is a tool that can also help us to achieve that, especially in times like this where you don't have, I mean, the latitude to engage in waste. Okay, so thanks for that, Ben. Ola, let me ask you this question. What form of coping mechanisms will you recommend if people suffer a pay cut or job loss? Do you think it is safe to keep investing in a period of uncertainty?
Of course not. If you are in, so I would say that the people that should be investing right now on the long term are people that can say to a reasonable level of certainty that their pay and their income, regular income, is going to be sustained over the period. And it's possible to know that depending on the kind of organization you work with, the kind of business you do, and all that. Now, if you are in a shaky organization, you need to be as liquid as possible.
Okay.
You need to stay liquid. You can't be putting money in long-term things, because you will have rent sometime in the year. You may have school fees when this COVID thing is over, right? In fact, online school is going on for most schools right now, so that you will still pay school fees, right? So if you are not sure of how your organization is going to respond in the light of this COVID thing, stay as liquid as possible. No, this is not the time for trying out equity. This is not the time for all those kind of random things that people throw at you that will guarantee you some exorbitant return if you keep money with them. Because the question is, if you lose that money, what impact will that have on you and your personal finances in the next 6 to 9 months? So that's what you should think about in where you decide to put that money. Now, for those that have, because I do know some people that have already lost their jobs at this time, and it's quite unfortunate. What I would say first is, especially for young people who haven't worked for up to 10 years, who didn't see 2008, 2009 events, know for a fact that these are economic cycles. It will always happen. But the one thing you need to know is what Ben hinted on. You need to save. You need to always have savings. Your savings is what keeps you sane in periods like this. That at least to a reasonable extent, at least you might have capital to start selling bread. Do you understand what I mean? You can have capital to do some mundane thing that you can turn over until you find your feet or get the next job. So for anyone that is just at the beginning of the curve, just know that you need to build a savings culture. Figure out what works for you and start saving. And just know it is very important. Now, if you've already lost your job, I know, for example, the pension funds, if your organization has been contributing to the contributing your pension so far, you can actually draw on your pension contribution at this time if you need cash, right? And then for organizations, depending on your legal structure and your labor whatever, there might be some payoffs with the job cuts and all that. But it's one of those situations where if you are in it and you are caught, you almost need to just hold yourself in and believe in your capacity to get a new job when all this is over. Like, the best I would say beyond all these other things is use this period where everyone is at home to upskill in one way or the other, so that you come out of this, because definitely there'll be a reorganization, there will be openings here and there and all that. And it's not because, and sometimes these job cuts are not because you're not skilled. It's just because the organization can't afford to keep the number of staff that they had before. right? So upskill so that once we're out of this, you can actually go out and get a new job or do something new yourself.
Okay, thank you very much, Ola. And it's interesting to know that we are tying personal finance management to self-development. Last week we did a series on half full or half empty, and I told a story about how I lost my job in the 2008-2009 recession. And I always thank God that it happened, because it was like a springboard for me. It gave me the opportunity to have my career switch, and it gave me the opportunity to upskill, just like you have mentioned. So it's good that you've also brought that to light. Thank you, Ola. Ben, I have this question for you. I know we've talked about investment options, but what do you think should be the basis of our entry or exit in an investment?
Okay. To me, for you to go into an investment, to me, I like to first of all guarantee my principal, because if I can't guarantee my principal, then there's no need talking about returns. Okay. And that's why I will go back to match my investment choice with my objective, and tying that investment choice to if my objective is short term, medium term, or long term, I'll match my investment choice to the kind of securities that are meant for the medium term or long term. So if it's for my goal is for short term and my objective is met, or exit a short term investment and quickly use that money for what the purpose is for. Could be for personal development, could be for payment for house rent, it could be for upkeep during this period that we are all sitting at home and all. But if it's for long term, then be maturing in 2-3 years, 4, 5, 6, or even 10 years and above. So that would determine my entry into those kind of investments, and also that will also determine when I'm going to exit those investments. So that objective should be key, and should be what should be the driving factor behind any investment that you go into.
Okay, thank you, Ben. Ola, I have a question. With the pandemic and lockdown, what ways will you suggest for generating income as an employee? What's your opinion about agriverse platforms and new apps like Rise and Chaka that help people invest in foreign market assets? What's your opinion on that?
So for me personally, because we are like, two things are very important here. Uncertainty. We're not sure how long this will last. We're not sure what businesses will come out of this standing. This is a point where you now find the companies who are cooking their books. This is what happens at this time. The companies that what happens usually is companies that you'd expect to thrive and go through. Some of these companies would actually collapse. You now find out that they were not actually making as much as they were declaring. These things do happen, and they've happened before. So there's nothing stopping them from happening again. Now, this is not the time to go into what you don't understand. This is literally not the time. Like if the only thing, if you want to go into that, I would say go and look for an asset manager who has been doing that before now, and give them your money to manage for you. So they already have skill in that area. I won't go into an investment or all those investing globally or whatever if I don't have the skill, because it's shaky. Regulation can come, and a company that will be thriving because regulation needs to fix a major problem. Regulation can come that can throw that company out of business because there's a bigger problem that needs to be addressed. If you get what I mean. So this is not the time to get creative on things you don't understand. Now, if you can find someone who you believe understands, then you can give it a shot. That's what I would say. Your other question was generating income as an employee. As an employee, I'll first of all say one of the things you can do is upskill. That's what you can use your time for right now to increase your value when you go post-COVID, right?
Yeah.
To increase your value. Now, if there's something that you have been working on, that is a potential business opportunity that doesn't require you interacting with people, then this might be the time to launch it. If it's something that would sell at this time, right? If it's something that you can sell on Instagram or any of those platforms, blah, 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 then go for it. But I would also say go in the area of interest, drive, passion, energy, things you understand, knowledge, skill, right? Find a way to trade the skills that you have. And what you could even do is actually take courses on selling the skills that you currently have. What business can you do with the skills you have right now?
Okay.
That's the way to go about it, because like I say, it's an uncertain period. It's not a time to say I want to start a business and leave the job that is still paying me a salary. But if you can find a way to do that business while you are still earning that salary, that's the best way to go.
Okay. Thank you, Ola. Ola, I have a question for you before you leave that maybe you can just take it a few seconds. Do you think it's a time to go into offering micro loans for businesses at this time if you are liquid enough?
If it's someone that is selling food, yes. If it's someone that is selling anything that the government is going to support right now,
Okay.
yes. Well, to we all know that business is neither here nor there. That's the caveat. But if it is something that you know will sell right now, for example, if someone that sells water has more demand than the capital that they need, right, than they have rather, then you can put money in and you can see that this person is going to sell. So there's a massive opportunity for some, but it must be something that current regulation supports them running their business right now.
Okay. Thank you very much, Ola. Ben, I would appreciate if you could just take these questions in the next, let's say, 2 minutes. How do you plan finances? You've talked about budgeting when the next income is not certain, because of the issues that we have identified. And what would be your advice for people that are working in sectors that have been badly hit by this pandemic?
Okay, thank you very much for that. Now that income is really very uncertain, it's I say it's difficult to plan finances, but the truth of the matter is you can always still plan. One important thing for you to do, or for us to do, is quickly wrap up on our short-term needs. Have enough savings up to 3 to 6 months, and have that as your emergency fund. Something that you can always fall back to should in case there's a job loss today or tomorrow. You have an absorber. Then, if they do not already have that kind of savings in place to carry them for this period of lockdown, or to see them towards getting a new job, it may be time to now start leveraging on your existing knowledge, skills, and abilities to see how that can generate income for you. But of course, in light of the current environment.
Okay. Thank you very much, Ola and Ben, and everyone that's been listening. I think it's been enlightening for us. It's been quite engaging. It's been very, very insightful. Thank you very much. See you soon.